Good morning, friends. Welcome back to the 45th episode of State of the Market Live. Today is 5th August 2022, and a fresh expiry week begins in Nifty futures and Bank Nifty futures. However, today we have RBI policy decision. The RBI policy meeting members, they would have deliberated for the past 3 days since 3rd, and today they would come out with their decision at probably 11 a.m. So that is a key event, though it is a well-known event, though the outcome of the event is very clear about a 35 BP hike. We will never know what the RBI governor will speak after the event, and we will never know what kind of quantum hike he is going to deliver. So whatever it is, the markets are going to be on tenter hooks until 11 a.m. and then the market will move a bit. After that, will be business as usual. So first, let's see what the charts are saying, and then we will see how to prepare for the day. Okay, yesterday what the market did was very simple. It just made an outside day. Let me take my pen. So yesterday I warned you that the 3-day distribution is very important for today, because there is an event on Friday. So on Thursday, because of expiry, they would have exploited the players here and here. You see that how simply we can understand the market. So the 3-day distribution was played well. So all the stops of players above this level were taken first after open, and then after the market spent a time bit, they came down and took all the stops here. Basically it was a stops hunt. People who were long, they had stops in this entire region until below, so all that got exhumed, and right at the open they went up and looked for liquidity. They found very little. Now if there was more, the market would have gone up, but it was not that big. So this shows that people were more biased toward the long side, not on the short side. So today also the bias may be on the up. That's why SGX Nifty is trading at around 17,445. But we need to break 17,535 for any consistent upside today. However, what I feel is we'll look at market profile charts in a bit to understand. Sorry about it. Apologies. Yes. So we will understand in a bit what to do with the market. So basically, the day should be like, today we have to keep a very good range on the upside. So basically this is how it should be, and then this is how it's going to be. It's like a gramophone structure. This is not a technical analysis, so basically just understand. So this is the wide range we have to go with. Very simple, this is like a kid playing with chart. Okay, so it is not some kind of technical analysis or anything. So basically it is a kid play. You see that today we are going with this kind of range. So we are keeping 17,535 as the upper side, and again 17,200. The options players are very strong. How they were strong, we will look at it in a bit. So basically if they break below 200, it's going to be very bad. If it is going up, it can hit 17,800. However, I expect the market to make an inside day today. So if we open below this range, below 535, we will have some bar like this, unless there is surprise in RBI policy. If the RBI policy has some surprise, number one, if the rate hike is different from what the market has been expecting. Number two, if Shaktikanta Das says something that irritates the market, okay, that changes the status quo of the market, then only we will see some kind of major upside. Otherwise, Fridays are generally supposed to be very calm. Basically, on Friday, most of the adjustments happen, so you should not think that on Fridays magic happens or big moves happen. So you have to be ready for that. And also, yesterday is a negative day. However, the week is a this is one of my pet peeve. What I mean by pet peeve is this is kind of like urban legends. That means I have some theory which says that during the week, that means basically during the week we have been up, so basically we will be down, not below this close, but however we will have a red bar below this. So we might close somewhere in this large range. So we have a huge playground today and an event. So let's keep our minds open. Now, for clarity and for brevity, we have to stay above 17,535 for longs, and we have to break 17,200 for shorts. Does that mean I should not trade in between? Yes, if you are a trader. If you are a scalper, yes, you can go ahead and trade. But if you are a trader, keep your zone of contact very clear. I do not want to trade in this zone. I want to trade in this zone. That is when kind of you'll get clarity of thought. Yesterday, one of the watchers, my video watchers, has put a comment saying that once the market broke 17,420, when I went all ahead with puts, that is the strategy to go. You can go and read in the comment section. It's a very simple thing. We will see in intraday chart how that view has helped. So now in Bank Nifty, same structure. So we see that, how players have trapped and cleaned the order book across the place. So you see that, they came all this way to clear the book, and above they first spent initial few minutes clearing the book at the top, and then once the day low, I have been telling for the past many sessions that we have to break the day low. You see that, but however, this is a bullish sign. That means buyers again took it back and closed above yesterday's low. This is some kind of positivity. However, that is only for Friday. That means they were trying to tease us with bullishness. So unless we stay above this zone, I will not be bullish. So any break of this zone is going to be negative, and the market can form a bar like this. I am expecting a bar like this because the momentum is falling. So we will make further ground on the downside unless the upside is broken. So the view is very, very clear. There is no second thought about it, and you should not be confused. Now let's see what happened intraday. This was a very nice site yesterday. Of course, I missed a part of the move, 50% of move. You can say that is fine. I'm happy as long as I am making small money every day. So the moment we broke 15,421 for 21, which is this close, you see that all were red bars, and you got a very good traction on the downside. Even Bank Nifty gave like 5 times money in the puts. However, we made only kind of twice the money. That's fine. We are not too much of greedy, because the moment you are stuck in puts, the market will come up and ruin your profits also. You see that we almost came to that 424 zone. So that shows I have been telling 17,424. Why do I chant that level often? Because as a trader, you need to understand that some levels are very, very important. You see that since yesterday, 421 is getting a lot of traction. That is where you are getting a lot of traction, and you see that even the strongest small bull run after the fall stopped at this level. So these levels are powerful. These, I call them as edge monk levels. I find them with a process using market profile, order flow, and various technical indicators. So if you want to learn, you can join my mentorship. Otherwise, you can learn on your own. That's fine. So now let's see what so in intraday, what happened? The market went up, tried to clear stops. There were not many stops, so immediately it started coming down, and once it came down below 421, there were so many stops that large players started eating all those, and this is what happened. So these were like large players sitting here on the book, and they kind of gobbled up everything to make the path clear today. So basically today their path is very clear on the downside. On the upside, if there were any stops built up yesterday, today they will clear before the event. So after the RBI event at 11 a.m., you'll see that the market can move big and we have to be very careful. You should not, fall under the road roller played by large players. Now let's see what bank nifty was, kind of, it's quite an eyesight, a very good event. So basically initially we tried to go up, however I told you in the channel that 38 to 72 is important. The market did not cross after that, and once we break the day low at 38 187, I told you, once that is broken, you see how it fell off the cliff. And however, at the balance low of 37,400, the market again recovered and it almost came to 37,800. So if you remember, I told you that 37,800 is the key level. So we probably exited most of our shorts at 37,800. That is fine. We missed this move, but I'm not, in our trading room, I keep telling my clients that we should not make truckloads of money every day. Okay, we should make average. Today is the discussion point on earning average return. Okay, remember that. I'll come to that at the end of the video after we discuss market profile. So now that mindset is very, very important. We'll come to that. Before that, we'll just go to a market profile, which has given a quite a bit of insight into trading yesterday. So I told you that 421 is important, the close is important, and you see how once the close is broken, the market just fell off. And this is what market profile does. It has indicated me that a small distribution is being formed, and once we break the key level, that's it. We are going to go to this level, which is the low of the balance. So this does not happen often. And you see that the low of the balance is somewhere almost nearby. You see that the low of the balance is almost nearby. Exactly. And you see that how buyers immediately. So that is why market profile is a very, very, very powerful tool if you know how to use it the right way. If you want to do it the textbook way, that is not helpful. You need to have a practical way that comes from experience. So this is how market profile works. If you want to learn market profile, again, time for self-marketing, please join my mentorship course. If you don't want to, I'm not going to hard sell it. It's up to you. So market profile is a great tool, and you see how it played and how I get my levels partly from market profile. Again, market profile is not a panacea. That means it is not a medicine for everything. No tool is. So you need to be objective, and this helps me, my objectivity, a lot. Okay. So once the reversal happened, I knew where it is going to go. And this was the level around 350, 335 levels. However, 421 also came. However, here large players are sitting, killing all the stops that they are getting on the way. So that's how the market profile chart is built up yesterday. And now let's look at bank nifty. In bank nifty, the distribution is a bit less. However, the fall below 38,187 is very clear. I got my level at the top. So what else do you need? We were early. We tried to make in calls. That did not happen. We exited with small stop loss. But once the puts were entered, that's it. So I was expecting 37,800 as a base. However, we fell below that. However, you see that the market spent the rest of the day torturing most of the traders on both sides. However, even on calls, we made money. You can go to our channel and see, we have taken 37,400 calls. So basically, once the market was above 37,400, and that is where the value area low is formed. So basically, I give my trades, and then the market profile is chart is formed. So I am ahead of even the formation of market profile chart. That comes with experience. It does not come through textbooks. So once we took the calls, even the calls doubled, and we somewhere entered with the decent profits. In fact, they were expiry trades also, but yesterday it was so tiring, I did not suggest any. Otherwise, you see that 37,800 call and 37,800 put almost tripled and quadrupled in the last half an hour. You can go back to charts and check. It was a wonderful day. And that's it in terms of market profile daily charts. Before finishing it up or wrapping it up, let's look at how the weekly charts are performing. So you see that I told you that kind of the weekly profile is very ugly. The market needs to trade a lot in this zone to repair the poor structure. So basically that zone is somewhere around 535 to 420. So we may need to spend a lot of time here before, so probably after the RBI policy, the market may spend, it may kind of make a P formation today. So we may fall to, again to 300 or 200 levels. However, we will spend the rest of the day here, repairing this zone. That is what my expectation is. However, something different can happen in the market always, and I'm ready for that. I'm never married to my bias. I am never married to my bias. So basically, the market does not need to spend volume. However, it needs to spend a lot of time here. That is very, very important. Make it a point before you trade today. Now, in Bank Nifty, it is a wonderful thing. It's like a beautiful, pattern, and this is very important for next week. So any move below 37,700 is going to be damn crucial for most of the Bank Nifty options traders. And on the upside, 38,187 and 38,272 remain the levels that you need to keep in mind. Okay, so mostly I think Bank Nifty can, if there is a any negativity in today's policy, I think Bank Nifty can trade in this zone. So even if it opens here, there can be a decent cut as long as 38,272 is not broken. If it is broken, my view will change. I will become long. So with that in mind, I think we are done with our Nifty and Bank Nifty analysis. Now for the topic of the day, which is average return. Okay, so we'll discuss something called average return today. What I mean by average return is, let's take the example of a normal distribution. For example, I'll keep an empty space here so that it is easy to teach you. So basically, let's say this is the x-axis and these are your returns. So basically, I'll put a small text box as well. Just a minute, because I'm not habituated to this. So I have to see where the text is happening. Yeah, this is basically average return. Or you can just say returns. You can just say returns. So this is the axis where returns are calculated, whether it is 1 lakh, 0, 10 lakh, minus 10 lakh, plus 10 lakh, something like that. Now, let's say we have a 0 line here. Okay, we have a 0 line here. Now, let's draw a simple line that shows us this one. Okay. Okay, probably it is not symmetrical. That's fine. So this is the return. Now, here you are having all the profits. Okay, now your profits are all here. Let's say your profits are here. Now, let's say your losses are here. Now, what happens is this chart, this particular, you are plotting all your returns here. Okay, suppose you make returns for the over 1 year and you are making on every day the profit or loss is different. Okay, so on certain days you see that suddenly you make 0 return. That means there is no return that day. You just eked out your brokerage. Okay, now on certain days you have 10K. On certain days you have 20K. On certain days you have 100K. Let's say that is the maximum you get. Let's say for simplicity. Now on certain days you can have minus 10K, minus 5K, minus 2K, anything, minus 100K. So basically all these losses will be plotted here and all these profits will be plotted here. Now what this normal distribution plots is how many times you have made 10K, how many times you have made 20K, how many times you have made 100K. It is not the profits, basically number of times you are making that profit. So basically, how many times you have made 100 minus 100K, it may be one time here. How many times you have made 10K, it may be somewhere here. How many times you made minus 10K, it will be somewhere here. Now, with this in mind, what I want to teach you is that once you are making profits, always, that means on a daily basis, you should ensure that you are making profit around this level. Very important. I'll put some other color so that it is useful for you. You should always remain in this zone. Rather, let me change the, kind of this thing. I'll put a rectangle. So you should stay within one standard deviation of your returns. That means you should always struggle. Trading is always about struggling to make a return like this or this. Lose like this, make a return like this or lose like this. You should never eye for these kind of returns. These are called tails. Let's not get technical. The concept is more important. So if you want a sustainable trading, you should not want to make profit of this every day, not even every day, not even on one day. For example, even on expiry day, even on a great event day, my focus is always to make this one. Now you can say, in the if you what people say is, if you want to achieve big, you have to aim for this kind of profits, then only you will grow. It is not correct, because what happens is, we will tomorrow on Monday we'll discuss the concept of skill and luck. Your return is a combination of skill and luck. Okay, so sometimes skill is maximum, sometimes luck is maximum. We never know, we cannot quantify it. So basically, you need to depend on your skill. And it is luck which brings these kinds of profits. That is, when luck is maximum, without your intervention, you just apply your normal skill, you will make a great day. For example, you go to office every day, you are getting a daily wage. Let's say we are getting a daily salary. On a particular day, one day, your luck will be maximum. Your boss says, today you will get the bonus, right? You don't get bonus every day. So that is your bonus. Don't think that your bonus is your regular pay. Okay, your regular pay is only 1K, 2K, 3K, 2K, 5K, depending on your capital. Okay, with a capital of 1 lakh, don't expect 10K every day average, right? You should expect only 1K, 2K. You have to make your mind like that. Don't train your mind to be superficial. That means with 1 lakh in trading, I can make 20K every day. That is not possible. 20K is a bonus with 1 lakh, because on that day, everything is falling in line. Your luck is maximum, and then you make 20K. But luck will not help every day. So there can be bad luck also. Sometimes luck will just sleep. There is no luck. Only bad luck will be there. But your skill can never be absent. Skill is something you have. Luck is what? Unknown force like a God gives. He will not give every day. Even in an entire lifetime, you will see that how many days you are lucky? Very few, right? Probably 5 or 10 or 10% of the life. It's not like that. So in trading also, every day, what I tell my clients and students is, aim for skill. Always try to make a 10K profit or exit at 10K loss. Don't make that loss into 1 lakh. That means if you are aiming for 10K profit, aim for 10K loss. Don't aim for 1 lakh loss. Basically, in investing, what happens is, most of the people depend on luck. Why? Because they put in a stock, and when that loss goes to like 1 lakh, 2 lakh, 3 lakh, 4 lakh, they keep on surviving, expecting the luck to perform. It will not happen. So you need to set your time frame. Yes, I will wait in a stock with loss when I have confidence and when my position size is lower. For example, I have a capital of 10 lakh. I am putting 1 lakh in a stock. Even if it goes to zero, I'm not worried, because I'm not on the road. But when I put entire 10 lakh in one stock, I should be worried. I should put a stop loss. So in trading, you have to put a stop loss, right? And you need to exit at that stop loss. So basically in trading, you have to stay within this range. Remember, Always remember, if you forget this, you will never safeguard your capital. Never, ever. One time is enough to blow up your account. You don't want to do that. It is not easy. It is easy to say. For me also, it is difficult. Sometimes when I make a profit of, let's say, 10K or 20K or 40K or 50K or whatever, my regular average, it just tempts me to go back and lose it and then make it 1 lakh. I don't want to do that. The moment I make my cut, I am out of the market. I'm just spending time on Twitter, on my Telegram channel. That's it. You need to dispose of that energy. You need to disperse that energy, whether positive or negative. You need to disperse that energy. Otherwise, mentally, you will be, kind of frustrating. Even on a day when I make 1 lakh per day, you have to be very careful, because that positivity will eat you and bring more lost days over the next course of time. So when you have a profit day, just get out, take a break. Don't trade, don't overtrade, because when you make a profit, you overtrade because you get into overconfidence. When you make big loss, you overtrade because you fight with the market. Both are very injurious to our trading account and also our emotional capital. Okay, so with that in mind, that's it for today. Hope this edition of Citrep is very useful to you, and have a great Friday, and trade only half the position on Fridays. Be very, very careful. Whatever it is on Friday, begin your weekend. Don't ruin your weekend on a Friday, right? If you have a great trading day on Friday, you will have a great family time on Saturday and Sunday, and emotionally you will be very strong for Monday, right? That's it. Have a great day, guys. Please give your comments in the comment section. Please give your feedback, good, bad, anything. I'll take it positively. And please like my videos as well as subscribe to them. Please bring me more subscribers, right? If you have liked these videos, that is the incentive that you can give to me. Have a great day. Bye-bye.